the U.S. Department of Commerce and operated by the El Paso Hispanic Chamber of Commerce. And here we also have a physical center located on 4141 Pinnacle, where we have all the equipment needed for you and your business. If you need, we have the technology to basically take your business to another level to compete with global markets. And a couple of housekeeping items before we get started with our presentation. If you have any questions, please feel free to send them to us. Daisy, our marketing coordinator, will be getting those questions from our Facebook attendees, and we'll make sure to cover those. But if you're watching us via Zoom, you can submit your questions via the Q&A box, which you can find right here. We also have a chat box, so please feel free to submit your questions, and we'll make sure that Mr. Benitez and Mr. Capretti have some time at the end to answer all your questions. And now I would like to introduce our speakers for today, but I'm gonna stop sharing my screen so they can start sharing theirs. And let me start by introducing Mr. Tony Benitez. Mr. Tony Benitez is a financial services professional and New York life insurance agent since 1998, providing life insurance and retirement planning to small business owners, individuals, and families. He has been a proud member of the El Paso Hispanic Chamber of Commerce since 1998, a proud member of the Diplomat Committee, a past Volunteer of the Year, a past Education Foundation board member, and an SBA Minority Small Business Champion of the Year. Currently, he serves on the Humane Society of El Paso Board, is a member of the Better Business Bureau, a member of the El Paso State Planning Council, and will serve on the Downtown Rotary of the El Paso Board this year. Ms. Benitez is married to Letty Benitez, Mary Kay Sales Director for the past 37 years, and have a foster puppy named Moyo. Is that how you pronounce it, Mr. Benitez?
Yoho.
Mojo. So,
thank you.
Thank you so much for joining us today, Mr. Benitez. We're very excited to see you here. You're definitely a familiar face in our webinars, so thank you so much. And now I would like to introduce Mr. Anthony Capretti. He is a virtual investment solutions consultant, providing coverage to territories in the Northeast, South Central, and Pacific zones. Anthony joined the New York Life Investment Product Sales Desk team in 2015. He is originally from Yonkers, New York. He attended Iona College in New Rochelle, New York, and graduated with a degree in finance. Postgraduate work experience began at JP Morgan Chase as personal banker, small business specialist, and investment associate in the Chase Private Client Program. After JP Morgan, he joined New York Life as a corporate compliance associate. His investment experience is highly concentrated in mutual funds, variable annuities, fixed annuities, and rollovers. Anthony currently holds his Series 663 and life accident and health licenses. Anthony was awarded National Internal Consultant of the Year for 2017, working with offices in the Northeastern Zone. Congratulations, Anthony. Anthony, his wife, Christina, and daughters, Emilia and Adelie, currently reside in Armonk, New York. Thank you so much, Mr. Anthony and Mr. Tony Benitez, for joining us today. Anything you'd like to share with our audience before we get started?
I think we're good. Let's get it. Let's do it.
Okay, awesome.
All right. Well, thank you all so much for joining. I'm gonna share my screen, and so today we're gonna review kind of understanding your IRA opportunities. So it can be pretty daunting to look at retirement planning. There's a lot of information out there. And if you don't have kind of a base knowledge, it can be scary, plain and simple. So today we're going to kind of go over the basics of understanding your retirement account options, some of the benefits of each of them, and kind of build your base knowledge for saving and retirement and all the different options that we offer here at New York Life. So the main two options we're going to talk about today are the traditional IRA and the Roth IRA. So the traditional IRA was initially started first, and the Roth did come along later. There is definitely some great benefits to both of them. I'm going to dive into more detail because we typically talk about traditional. You may hear about Roths, but you don't really know all the options and benefits to them. So we'll dive into that in more detail today. And again, we do have plenty of time for questions and interaction and things like that. So the IRA contributions, right? What can you put into an IRA? The IRS limits the amount that you could put into an IRA contribution, right? So for 2020, the maximum contribution was $6,000 per individual, right? These are individual accounts. And in 2021, it remained at the 6,000 mark. Now, if you are older and you're above 50, they give you what's called a catch-up provision, right? So there's a catch-up contribution so that you have your traditional limit of $6,000. And when you turn 50, they allow you to put an additional $1,000 in. Okay, so that number has held for both 2020 and 2021. They do make changes to these depending on inflation and things like that. So these are not completely stagnant. The IRS does look at these numbers and does make changes accordingly. So as of right now, if you're over 50 and you wanted to contribute to a traditional IRA, you could put $7,000, right? You could put your $6,000 base contribution plus your $1,000 catch-up provision, okay? So let's talk about the traditional IRA. Okay, traditional IRAs are used for saving and retirement, and one of the number one benefits is tax deductibility of the contribution. Okay, they're not always tax deductible, and we'll go into a little more detail. But the main benefit is that I want to reduce my taxable income and save for retirement. So that's how these solutions were created. Right now, traditional IRAs are the account type. There is multiple different ways you can save for retirement, whether it's via mutual funds or fixed products, whatever it may be. But the account titling is the IRA, right? The traditional IRA. The other large benefit of IRAs is that the earnings are tax deferred. So they grow tax deferred. So along the way, you are not liable for taxes until you distribute it. Now, there was a significant change last year, just prior to COVID, and it was called the Secure Act. The Secure Act did make some provisional changes. One big factor in a traditional IRA is that you can't defer it forever. There is a point where the IRS says, we want a portion of our money, right? You never paid taxes. So at 72 years old, you need to start to take distributions. And there's a minimum called a required minimum distribution, okay? So you do have to eventually start taking it. And when you do take it, you are going to be subject to ordinary income tax on the distributions, okay? And again, you do have to take it. If you do not take it, it is a 50% penalty. So it is not something that you want to forget. Let's put it that way. So who should consider a traditional IRA? Right? Number one, it's a retirement vehicle. So individuals who are saving for retirement. You have to have earned income. Okay, so you have to show earned income to the federal government. Okay, so if you have no earned income and you work in a cash business or something like that, this is not an option for you. You have to show earned income via your tax return, right? Individuals that want deductible contribution, they want to lower their current taxes. Another big factor is individuals who are rolling money from an old employer-sponsored retirement plan. Okay, so when we work at companies, corporations, very often we start a 401k or retirement plan. When we leave that job, we very often just leave them behind. But if you do want to move them, you can, and you'd move them into a traditional IRA. I'll go into a little more detail about the logistics of that, because that's very common, and that's very often the kind of base contribution that we will use to start a traditional IRA. So how much can I deduct? Okay, we get this question quite a bit. This is my business, and I still go to the good old cheat sheets because it gets kind of confusing. But one of the largest benefits is if you are not covered by a retirement plan at work. So at your employer, they do not offer any sort of retirement plan. Your deduction is, your contribution is fully deductible no matter how much money you make, because you don't have an option to save at your employer. Okay, so you basically need to start an IRA, and the IRS pulls all of the constraints off, and they say if you don't have a plan at work, fully deductible, you can deduct the entire contribution no matter what. Now, if I am covered by a plan at work, okay, so I'm married, I file my taxes jointly, and we are covered by a plan at work, okay, and I still want to contribute to a traditional IRA, there's income limits, okay, so up until $196,000 for 2020 and $198,000 in 2021. Modified adjusted gross income, so that's after all of your deductions, you can make a deductible contribution. It does start to partially what we call phase out, but if you look on the long end there, $206,000 in 2020 and $208,000 in 2021. If your modified adjusted gross income is above those levels, you cannot make a deductible contribution to a traditional IRA. Okay. Now, the other thing that is very important is we're here for discussing the options available to you, but there is definitely tax benefits, and this does affect your tax situation. So it's always important to review these plans and options with your tax advisor. So if you have a CPA, you work with a specific tax advisor. Before making any decision, we do very much recommend reviewing the options with your tax advisor. Okay. So now what if I am single or I'm married, filing separately? It's joint but separate. It's a lower limit, right? So if I'm single, that's fully deductible to $65,000 or less, $66,000 in 2021 apart, and it's fully phased out at 75 or 76 years old. Okay. Now, these are numbers that are very readily available. You can always find this information very easily on the IRS website. So don't feel like you have to remember every single piece of information in here. Again, this is what I do for a living, and I very often forget, right? These are a lot of numbers here. So don't feel like you have to remember the exact figures, okay? Now, we get a lot of questions about withdrawals. I want to put contributions into my IRA, but what if I need it back? What if I need the money in an emergency? Generally, right, we want to make sure that we're putting this money away for retirement. And the retirement number is 59.5. So after 59.5, there is no penalty for taking out of an IRA. You would be taxed as ordinary income, but we don't penalize, okay? If you're under 59.5 and you need to take the money, you would get a 10% IRS penalty on the distribution, okay? There is some workarounds. You see here, there's a penalty-free withdrawal option for purchasing a home, certain withdrawals for higher education, for having a child or adopting a child. You can take $5,000. So there is options, but it would still be taxed as ordinary income. That's very important to remember. The penalty-free withdrawals are only on the penalties. It's not on the taxes. So you still need to pay the taxes on these assets because you did not pay them. You did take a deduction. Okay. So there is ways. They are limited. The IRS does not make it very easy. They want to make sure that when you do put your assets into an IRA, it is earmarked for retirement. It's just something that's put away for long term. Okay. Now, our Roth IRA. Okay, you've probably all heard of a Roth IRA, and you may have heard great things about a Roth IRA, but so many folks don't really understand exactly what a Roth is and the major benefits of a Roth. So the Roth IRA is a non-deductible contribution. So when I make a contribution to my Roth, I don't take a deduction from my taxes. Okay. However, if I hold the account for more than 5 years and I'm over that magic 59.5 number, my distributions are tax free. Okay. That's why people talk about Roths. Tax free distribution for 59.5 or older and holding the account for 5 years. Okay. There is also access here for a first-time home buyer. You can take $10,000 if you need it. You also have access to your contributions at any time, depending on the product. But you did not take a tax deduction, so you can technically take your contributions back if you need to. Right? You can contribute as long as you have earned income, and there is no required minimum distribution. Okay, so you do not need to start taking income on this in the future if you don't want to. If you want to leave this for a legacy, leave it to your family members, you can do so. So there's less kind of constraints and red tape around the distribution options here, or the distribution requirements, I should say. No required minimum distributions. So who can contribute to a Roth IRA? So if I have modified adjusted gross income here, again, you can see here if I'm single, up to 124,000, partially deductible up to 138,000, and if I'm filing jointly, 196,000, and partially up to 206,000. Okay, again, work with your tax advisor here. If this is something that you do want to look into, we would definitely recommend confirming all these, your modified adjusted gross income with your tax preparer. Figure out if you are eligible to make a contribution to either a traditional or a Roth IRA. So the big advantages of that Roth, number one, by far, is the qualified distributions are not taxed. Okay, so that is the huge benefit of why clients use Roths, is that they do not have to pay taxes on the distribution if it is 5 years or 59.5. Okay, it may create more income than a traditional IRA at distributions because of the, depending on what tax rates are when you do go to distribute a traditional IRA, right? And the no required minimum distributions. Also, the funds traditionally go to the beneficiary income tax free as well. So this could be a very good option for legacy. So clients do like that and the flexibility of the Roth. It's very popular, and especially right now with the potential direction tax rates are going, clients are looking to start Roths or convert to Roths and have more flexibility with the option. Now the withdrawals, again, tax-free on that magic 59.5 and 5 year, right? Partial penalty-free withdrawal for under the 10,000. 2020 did give the option to take $5,000 penalty-free for birth or adoption of a child. And again, the no required minimum option is big as well. So what are some of the other ways that clients can use non-retirement advantages of a Roth IRA? Sometimes clients use them for education funding because you could take your contributions out and not have to pay taxes on it again. No income tax to the beneficiaries if it's held over the 5 years. And again, they keep harping on this, but the no required minimum distribution is a big deal because a lot of clients do save for retirement, and then they realize maybe they don't need as much income in retirement. And if they have a traditional IRA, they're forced to take it. So it does create more taxable income in retirement, which a lot of times they are not looking to have. So kind of comparing them side by side, right? We have our traditional IRA. It's great if you're not covered by employer plan at work. If you're covered by employer-sponsored plan, you can still make deductible contributions depending on your income. Big benefit of the traditional is the tax deduction, okay? I do not want, I want to reduce my current taxable income, so I want the traditional option. The Roth is tax-free. That's the huge benefit of the Roth is I want tax-free income in the future. Again, if I'm not covered by a plan at work, or I'm covered by a plan at work and I can make partial contributions depending on my income level. So there's no right or wrong answer. There's benefits to both solutions, and there's clients that very often have both, and they can go back and forth between contributions year over year. So it's also important to remember that this is not something that you are tied to forever. You can make contributions in different years into different accounts. We get quite a bit of questions about converting traditional IRAs. This is very popular option right now. Well, where I have a traditional IRA and the IRS gives you the option to convert it to a Roth IRA, okay? It is a decently complex process. You do have to pay the taxes currently, right? So you have to be able to pay those taxes due on the conversion out of pocket, right? You have to kind of look at what future tax brackets are, future tax assumptions, estate conservation is important to you. So there's multiple factors. The Roth conversion conversation is absolutely 100% a conversation for your CPA as well. We do not recommend Roth conversions without speaking to your tax advisor. It's very, very important to have that conversation. Now, another aspect of the Roth conversion that changed pretty recently, back in 2018, is that you cannot recharacterize a Roth conversion. So they used to basically give you a do-over. If you wanted to do a traditional to Roth conversion, you could go back and say, never mind, I want to go back. They took that away. No more option. Okay, so once you make this commitment to a Roth conversion, those taxes are due and you cannot recharacterize. Again, very, very important to discuss these options with your CPA and tax consultant. Now, the rollover options to a traditional IRA, we get questions all the time. Well, what can I put in, right? What can I move from my prior plan into a traditional IRA? This really covers all the major ones, right? 401k, which is obviously the most very popular employer-sponsored plan. 403b, if you're working for a non-for-profit organization. 457b, if you're working for a government plan. Pensions, profit-sharing plans, things like that. SEP and simple IRAs, another very popular option. So these are all portable into the IRA. What's also very important is to remember that this does maintain the tax deferral. Okay, so unfortunately, a lot of clients, for some reason, feel like they can't move their old retirement plans because they'll be penalized or they'll pay taxes, and that's not the case, right? You have the option to do IRA or retirement plan to IRA rollovers. Okay, direct rollover, which is a transfer, and the financial institution, like us at New York Life, we take care of that process for you. So you don't get a check, you don't have any tax reporting issues, nothing. right? We were literally take care of all the money, everything on the back end, and it's direct. So we continue that tax deferral, no penalties, no taxes. Indirect is if you do actually get a check, you have 60 days to put it back into an IRA and continue the tax deferral and not pay any taxes or penalties depending on your age. We usually don't recommend the indirect rollovers. They can get a little confusing and usually not the best option. But the direct option is highly recommended. And again, we have a whole team, whole area of our company that just works in that business. And a legacy, right? It's very important to always make sure that all of your beneficiary designations are up to date. Even on a small account that you may have totally forgot about, or whatever it may be, it's very, very important. Unfortunately, we hear these stories quite a bit where someone passes away and they didn't realize they didn't have a correct beneficiary on file, and then it has to go to different probate, things like that. So just make sure that's a big part of our job, is making sure that all that information is up to date, doing annual reviews and making sure nothing has changed significantly, to make sure all of your IRA and all of your account beneficiaries are up to date. So just kind of a friendly reminder there. We do like to make sure that those are up to date and we don't have any unfortunate situations. So I appreciate the time today. I know there's quite a bit covered in there, but I do like to kind of keep the essence of time and not drag on too long. So hopefully there was some beneficial information in there for everybody. And we are happy to answer any questions that you have.
Awesome, great presentation, Anthony. So let's go ahead and move to some questions that we got from some attendees. And I know, Anthony, that some of these questions you already covered, but let's go over these questions in case there's any clarification needed. So first question from one of our attendees is, can I contribute to an IRA even if I have a 401k at work?
Yes, so you can contribute if you are covered by a 401k at work. That's where those contribution, the income limits do come into play. So if you are not covered by a plan at work, the IRS does not care how much money you make. You can make a full deductible contribution. If you are covered by a plan at work, you have to go to the chart, figure out what your modified adjusted gross income is, and figure out if you can make a deductible contribution.
Awesome. Let us know, Mr. Gonzalez, if that answer your question. Next question that we have, and this one is actually from Facebook attendee. She's asking, under what circumstances could I use my IRA before retirement?
So some of it depends on if it's a traditional or a Roth. There is options to access the funds, again, for birth of a child. If you need money, if you are purchasing a home, you can take $10,000 without any penalty. Certain education, higher education costs, things like that. So those are the main ones. What's important, another factor that I had mentioned earlier was the Roth. That if you do a Roth, you can always take your contribution back. So if you're putting in $6,000 a year continuously into your Roth and you need $10,000 for some reason, you're not going to start to touch any of the gain in the account. So you can take back your contributions penalty free and no taxes. So that's a pretty large benefit of the Roth.
Okay, awesome. They're also asking if there's a deadline for IRA contributions.
Great question. So IRA contributions are up until the tax filing deadline. So this year they did extend the tax filing deadline to May 17th, right?
Yes.
So typically, obviously, April 15th, but this year we did extend it. So you technically can still make an IRA contribution up through May 17th.
Okay, and next question is actually related to taxes. They're asking if they can get a tax deduction for their contributions.
Of a traditional, yes. If you use a traditional IRA, you can deduct depending on your income, right? That's where the chart comes into play. And if you use the Roth, it is not a non-deductible contribution. So if a tax deduction is an important factor for them, they're going to want to look at the traditional IRA.
Awesome. Thank you for that answer. And we have one last question. This one's also from Facebook. She's asking, how much can I contribute to my IRA? Is there like a limit?
So it's 6,000 if you're under 50 years old, and if you're over 50, it's 7,000.
Okay, under 50, 6,000, over 7,000.
Correct.
All right. And those are all the questions that we received. I don't know if you'd like to add anything else, Mr. Benitez or Mr. Anthony.
Sure, I'll make a comment. Anyways, when I first started in New York Life over 20 years ago, I knew that, getting knowledgeable about IRAs, about retirement was going to be very important, to my clients. And so actually these last couple of months, it's been very busy, helping clients with setting up traditional IRAs, Roth IRAs for the various reasons that Anthony was talking about. And, even like he also mentioned about rollovers, somebody separates employment. I got a call yesterday from one of my clients about doing something like that. So, it's always good to be able to help people, with their retirement plans and explaining and educating them about all these different choices and information so they can make a good decision. So thank you. Thank you for the Hispanic Chamber for sponsoring this. And thank you, Anthony, for giving all the good information.
Absolutely. I appreciate the time today. And yeah, hopefully that was helpful. I know it is it could be a daunting task, and it's very easy to just say, well, I don't know what that is, so I'm not going to look into it. So at least we got some ground knowledge here, some base knowledge, and then that's where Tony and myself can get involved and answer additional questions and get you going in the right direction.
And we thank you so much for that, Mr. Benitez, Mr. Capretti. And just one last thing, if you can share with our audience your contact information in case they have any other questions. But of course, if any of our attendees would like to get their contact information and you don't get a chance to write it down right here or take a picture, just call the chamber and we'll be more than happy to provide it to you. Just know that Mr. Benitez, he is a member of the Hispanic Chamber. He's also a diplomat. He's very involved, and we appreciate both of them for their time today and joining us today and just teaching us a little bit about these retirement options that are available through New York Life.
Awesome.
I'll give my phone number. It's a local here in El Paso, 915-534-3216. And I also put my email my phone number and email on the chat. So thank you.
Okay, awesome. There you have it. And if you have any other questions, call us or call Mr. Benitez directly. Mr. Anthony, will you be sharing your contact info as well?
Unfortunately, in my role, I can't speak directly with clients because of the consulting role. So that's where you can contact Tony, and then I can get involved through Tony because he is the agent for New York Life. Okay,
absolutely. Well, thank you so much for joining us today. Thank you for your time and sharing your knowledge and expertise. We'll see you in our next webinar. Thank you so much to our attendees for joining us today, and we'll see you next time.